What's up YouTube, and welcome back to another brand new video. So today is Thursday, May 14th. Again, it's not the end of the stock trading week, but I did decide to do another video today just because we are seeing so much activity in the stock market. So in this video, we actually have a lot of things to cover. So for this whole portfolio, I've done a whole lot of actions. I've sold my airline stock, Southwest Airlines. I was just taking massive loss on it, and it was really just holding back the portfolio that I feel like I could have used that money to just throw into another stock. So we'll talk about that. We'll talk about me acquiring some other shares and some other companies. And I did deposit a little bit more money in the account. And we'll talk about just the overall health of the economy and the stock market and what's really been happening this week. So to start with, let's look at the 1 week chart. And as you can see, it's not looking too hot. Today was green, but overall it was looking pretty bad. If we looked at where I bottomed out at, we were down about 6.7%. So that's actually a lot. We were only up $4 in return for all my money invested. But today we were up about $15, so not too bad. So from my own research and what I can tell, the market fell because Chairman Jerome Powell said the outlook is looking highly uncertain. So that really sparked the markets to really free fall and see what we were seeing this week. But next I would like to go over to the overall portfolio. So I did sell my one airline stock of Southwest Airlines, and it was really just bringing everything down. In total, I took a loss of about $8, and that was to me a lot of money just because I just have a fixed amount of income I am throwing in this portfolio. But I did take that money and decided to acquire another share of SPHD, which does increase my total revenue to $5.67. And then during the whole downfall, I decided to acquire two new companies, one being Amdocs and the other Cisco. So this really helps diversify everything. Cisco kind of gets me into industry and food service. So in total, my annual dividend income expected is $27.48. So the reason why I also did acquire these two companies was because they are a few who have not suspended their dividend yet, and I will get into some analytics explaining a little bit more on my thought process on why I decided to purchase these two. But they pay out pretty good dividend, $1.80, $1.31. They're really just safe, and as we go through this whole downturn, we can't really expect what's going to happen on the other side. Just that 5 years from now, things are going to grow, and we'll get into some more of my thought process as why I chose these companies. So to start with, we have Amdocs. And again, they are a technology company, and they specialize in really communications and the media for other technology companies such as AT&T, which I do own a share of, so it just kind of ties into the whole portfolio. But some of the key things I look for, and the reason why I chose Amdocs, was if we go to their 5-year graph, we can see it is growing. $56, peaked at 74, so not looking too bad. Some other things I do look for is we go into key data. Now, we can't see the other last 5 years just because I don't want to pay for the monthly subscription as of right now. But from the little bit we can see overall year after year, it has been growing, and it is expected to grow as we move into the whole 5G era. So the next tab I like to point out is dividends. So here we have a lot of information, and I'll tell you the main things I really look out for. First one being is the dividend yield. Now, mostly I prefer to aim for stocks around 3 to 4%, but I really wanted something safe and something that I expected to return me more money. So I did settle for 2.2%, not terrible at all. Next, we go on to the payout ratio. So this is really the numbers that are translated like golf. The higher the number, the worse it is. The lower the number, the better. So in the whole dividend community, you typically want to see anywhere from about 20 to 60%. Anything over 60 starts to get a little bit more worried. Now, once we get into Cisco, its payout ratio is 80, but there are other analytics that I'll pull up that did kind of sway me into purchasing Cisco. But for Amdocs, 30%, looking beautiful. Doesn't have a large dividend growth, but again, with the whole 5G, I am expecting it to grow. And it does pay out a share of 32 cents quarterly. And then the last thing I look at is still on the dividends tab. We go to dividend history. And here I like to select all, and we go to all on the bar. And as you can see, it's just straight up year after year, quarter after quarter, just growing. 13, 15, 17, 19, 22, 25, 28, 32. So it's perfect. It's been growing its dividend, checks all my boxes. So I did decide it was time to pull the trigger on Amdocs. So now we'll move on to Cisco. So right before we start getting into the analyzing of Cisco, I would like to point out that there is other information just besides analytics and quantitative data. There is qualitative data, which is numbers and information that do not exclusively in turn to statistics. And this is like pretty much information that we want to know about the company, like what are they doing, what's their history, what's their past, and what's going on for their future. So for me, I really like to look at the history. So here we are on the Amdocs wiki. It's pretty simple. This all takes maybe 5 minutes to do per stock I'm analyzing. But I like to go look at its recent stuff. So here we can see it's acquired TTS, a privately owned provider of mobile network engineering services, to further expand 5G. So to me, 5G is going to be the next big thing, and Amdocs showing its push to really expand on that really checks the box off. So next we have AT&T extended its partnership with Amdocs. So this is just really combining two forces to make one big powerhouse. This is great. I also own AT&T, so this is something positive to see. And Amdocs donated resources to food packs of Globe Telecom as part of its aid operations for Filipino communities affected by the eruption of Taal volcano. So not only are they implementing on 5G for the future, they do have some morals and they do want to give back and help out to communities in need. So all around a great company to me, and was time to make the purchase. All right, now we're on to Cisco. So the reason why I chose Cisco was I am a fast food worker. So in lots of our deliveries, Cisco is the name on the truck. So I am a little familiar with like my interaction with them. They do provide food and shipments for tons of fast food restaurants and just other restaurants in general. So they are kind of a staple food service and industry. They are something I was wanting to add to the portfolio. So if we look at the 5-year, again, checks my box. It's been having a steady growth, peaking at about $85 before this whole downturn. Currently at $47. Looked like a really good buy to me, checking this off the box. Next we move to key data to look at its total revenues. Again, we can't see too far back, but year after year, steadily growing. Not too bad. It did take a little bump right here, but generally, nice return. Next we move to dividends. The dividend yield looking perfect. It's in that 3 to 4%, which I really do like. The only downside is its payout ratio. It is a high 85%, but there is one more core analytic I was looking at, and that is this dividend growth. So in the dividend community, with the dividend growth over 50 years, that's going to throw that stock into what's called the dividend aristocrats. So with a growth of 50 years, that is a long time to be continually growing your dividend. And this is just a slight hair off. It's 49 years. So it's really up there with the dividend aristocrats. So I really don't think they're going to cut their dividend or try to suspend it during this downturn. They'll probably keep it up. But then that ties into the whole payout ratio. With Cisco, I did take a stock or a gamble with this dividend growth. It's close. It's right there on the 50 years. So looks okay. Last, we go to the dividend history. Again, with that almost 50-year growth, this chart looks phenomenal. If I was to put a line through it, it's just up. Like, it doesn't get any good looking than this. Alright, so after analyzing Cisco, so just like Amdocs, we will be getting into Cisco's history as we observe that qualitative data. So in its history, really not much is going on. They're still kind of doing the same thing they've been doing. And to be honest, it's not really checking off the box for me. I do know what they do now, which is deliver food. But seeing not so much activity could be good or bad. Depends how you're looking at it. I'm just really depending on that dividend growth and for it to continue that dividend. Okay, and then the last update is I did deposit $200 more in, which I did use to buy Amdocs and Cisco. And then the money I sold from Southwest Airlines, I used to purchase another share of SPHD just to increase that monthly dividend income. So that's been the whole update for the portfolio, and that's going to be the video for the week. I look forward to the next video. Please consider subscribing. Leave a like, leave a comment down below. Let me know what stocks you guys are investing in and what I could really do to add to the portfolio. My goals are diversification and really to stockpile on more of these other shares of the same stocks I own. So thank you for watching, and we'll see you on the next video.